But first, bad economic and market news has turned good, even great, but can it last? And could a rising dollar ruin it all? This is the question I want to put to AMP Shane Oliver, who I've got on the spot right beside me. How are you, mate?
Certainly have got me here. I'm good.
Okay,
good.
Let's talk about all the good news. Like that economic growth number last week, you know, I was more bullish than you, but you were positive.
Yeah.
How shocked were you when you saw it? Very?
No, I wasn't very shocked because I know the Australian economic data does bounce around quite a lot.
Okay.
0.6, I was thinking 0.4, you're coming at 0.6.
Yeah.
Probably the 3% was the surprise at the previous,
Because
the previous quarter.
From 0.9 to 1.1.
Yeah, to 1.1.
Yeah.
So whichever way you cut it, that is a good number. Now, 3% in Australia, US was 1.9%, Europe was 1.5%, Japan was 0.5%.
We're the best economy in the world if you want to be a little bit jingoistic.
You're sounding like those other guys, you know, the best, worst, all that sort of stuff.
Yeah, that's
highest debt level.
I'm one of those guys. I'm one of those guys.
Get away with that sort of stuff. But whichever way you cut it, like I've been relatively optimistic on Australia. My line has been something along the lines that, you know, it is rebalancing, but it might need some more help. Hence, lower dollar, lower interest rates and so on. But in the great scheme of things, if you think about the last few years, ever since iron ore peaked in 2011, there's been constant chatter that Australia's going to have a recession. It's been an ongoing source of debate that the housing market's going to crash, the banks are going to crash, all these sorts of horrible things. And look, here we are, 4 or 5 years in to the end of the biggest boom in our history, and we're still sort of rolling along. Not booming, but we're still rolling along, which goes to the there's a good speech by Philip Lowe, Deputy Governor of the Reserve Bank this week, using the word resilience. And the Australian economy certainly has been resilient. And all the parts that were sort of smashed or suppressed, if you like, by the mining boom, because interest rates were high, the Aussie dollar were high, they've all bounced back and they're filling the gap. And that's the way a good, well-working economy should operate.
Yeah, and it's testimony to the hard work and the gutsy work of the likes of Hawke, Keating, Senator Button, Howard, Costello, in taking on some of the big decisions, which were politically risky to do. But this is a much better, flexible economy than ever before.
It certainly is. And I used the word last week when I wrote about the GDP numbers. Had to change because they were saying, oh, a beautiful set of numbers, all that sort of stuff. But you can use I use the word lucky country rides again. And someone pointed out that Donald Horne didn't actually refer to Australia.
It was a cynical line.
It was a cynical comment that Australia's done well despite poor leadership. Well, the funny thing is that Australia is partly doing well now because of the good leadership we had back in the 80s and the 90s, deregulating the economy, opening it up, making it more flexible.
And the 2000s as well. You remember, it was in the year 2000 we introduced the GST.
Well, that's right. All those sorts of reforms over almost a 15, 20-year period. Really served Australia well, and you're getting the benefit of that now.
Yeah, and it's exactly what Malcolm has to do. He has to come up with a really good game plan for the future, or else he won't be regarded as a great leader.
That's right. He has to start putting some vision out there. And I agree with you. I saw somewhere you're saying that you can understand the politics of an early election, but not sure about the economics. If the politics of the early election is to get the election out of the way such that there's some good economics afterwards, then maybe we'll forgive him for going early if he does turn out to go early. But if it's just more of the same, another 3 years of not doing anything, then I think we're all going to be kind of depressed.
No, I must admit, you're the right guy to ask this question because you often do look at those kinds of generalisations, and there is a bit of a generalisation that when an election's called, certain businesses go on strike, they don't invest, they don't employ. Is there a bit of a pattern that actually does happen?
There is, but it's hard to sort of, you can't show it on an annual basis, but if you ask retailers, you'd say there is an element of that.
Real estate agents always say.
Real estate agents, you put it on hold, let's see what's going to happen afterwards.
There's negative gearing capital against
I mean, those issues are there this time, and obviously it looks like Liberals are going to try and paint a stark difference between the two sides. So, and likewise businesses, to the extent that a business capex or investment decision will depend on what the government might do, then that might be put on hold as well. So it can have an impact. But if you go back through economic data on an annual basis, there's no clear evidence that election years are worse than non-election years. It's just the period around the election.
Yeah, all right. And I guess my point was we've got nice momentum at the moment because the business confidence and business condition figures this week were pretty good, weren't they?
Well, they certainly were. That's the funny thing here. Confidence was sort of around average, just a little bit above average. Conditions were actually quite good. You know, not
that's what businesses are thinking.
So they're actually saying, well, I'm feeling a bit nervous about things, but I'm actually experiencing things which are okay. And there's two elements in that where they ask other questions, not just how are conditions going? They asked, well, what about employment? The employment component looks okay. It's not sort of saying we're going to get 3% employment growth like we did last year, but still saying pretty good employment growth. And there's another bit that relates to CapEx plans, and it actually looks quite good, despite
which is something you'd like to see.
The ABS numbers are a bit more mixed.
Yeah, okay. Now, the dollar and the implications. A lot of our viewers have done well because the dollar's come down, and on the show we actually said buy companies, they're exposed to a lower dollar, and when we dropped from 93 to 70s, a lot of our viewers have done well. I guess they're a little bit worried with the currency going up. Do you think the Reserve Bank is going to be tempted to cut if we see the dollar go to, say, 75, 76?
I don't know about cut, but it will start to enter their thinking, and jawboning will get there first. So we've already seen a little bit of that. About 2 or 3 weeks back, John Edwards, who is on the board, former economist, has been around, great experience in analysing the Australian economy.
He was on this show on Monday night, which of course you saw.
Well, I did. Yeah. But he came out and said, well, he'd feel a bit more comfortable if it was a bit lower. Yeah. And then you had Philip Lowe the other day say something, Deputy Governor, say something very similar. So it seems like key RBA officials, board members and so on are starting to think, well, maybe this could be a problem. So I wouldn't be at all surprised if it keeps going up like this. The first move would be in the April statement, which comes out after the meeting. They'll say, well, this is getting a bit too high for comfort. You know, it could be a bit of a dampener. Maybe it's not reflecting fundamentals and so on and so forth. So they'll try and talk it down. But if it keeps going up beyond that, then they might, certainly may resort to a rate cut to help
Shane,
it down.
a bit of this spike in the rate, and I actually did a quick calculation, you probably calculate better than me, but from the low in February 10, we're about 9.7%, using a number I used today, but we could be a little bit off since the close. That's a big rise. Is some of it, do you think, because foreign investors are thinking, well, we thought, we believed the great Shane Oliver that the currency could fall in the 60s, and therefore we were going to wait until that happened, and then we'd go in. Yeah. If they think the fall in the Aussie may well be over, would some foreign investors be moving in now and buying?
It's quite possible. If you can sort of track what they call short interest in the Aussie dollar, and there was a lot of short interest until recently. The graph was below the zero line. Yeah. You saw something very similar about 2 years ago when the Aussie dollar fell to about 86 cents. This was early 2014. And then it rallied up to around 93, 94, 95. Sure. It's been about 6 months there, which wasn't good for the economy. So we've sort of had that fall to about 68.50 back in January. As you say, up nearly 10% now, which was similar to the rally you saw back in early part of 2014. And I think part of it is short covering, that investors have thought, well, we were thinking it was going lower as I was. It hasn't happened. The oil price has gone up, gold's gone up, the world hasn't collapsed. What do we buy? We buy risk assets, or assets that benefit from a more risky environment. Aussie dollar's one of those. So I suspect there's an element of that, but I think ultimately, if the world is still okay, America will continue to raise interest rates gradually. In the meantime, in Australia, there's still more of a chance they might cut rates, and that I think ultimately will bring it back down.
Okay. From what I was saying, there's a whole run of important meetings tonight, ECB, Bank of Japan, Fed next week, and the OPEC meeting as well on March 20. Yeah. All of these could be pretty important for the market, couldn't they?
They certainly could, and a lot does come down to central banks, and part of the rally we've seen recently has been in anticipation of central banks taking a more dovish turn. Obviously, ECB tonight, they've already signalled back in January that they'll consider doing more at this meeting.
A big bazooka he was talking about.
So hopefully that big bazooka is pulled out. A bit wary about further, more negative interest rates. I wouldn't want to push down that
Check loans to the banks would be better, wouldn't it?
Well, I mean, it can be negative for the banks, and you probably don't want to do that. But I think they'll do other things which will help. Okay. One is increase their QE program by buying corporate debt, which I think will have some impact on bank debt as well, pulling down the yields when they borrow in the private markets, and also cheap funding for banks, what they call LATRO in the jargon the Europeans use. So I think the ECB will probably deliver here. BOJ, a bit more uncertain about next week. The Fed, I think the only thing the Fed really needs to do here is to sound helpful, not do anything at the moment. And I think that they're going to say something along the lines, well, we understand there's some threats globally. We're prepared to sit on our hands, let some of those things work themselves out before we move rates up again.
Great stuff. Good to see you, Shane, and let's hope this rally continues for a bit longer.
Certainly do.
Okay, that's Shane Oliver from AMP Capital. After the break, we'll see what is critically important for developing a country of entrepreneurs with the legendary Professor of Entrepreneurship, Tom McCaskill.